Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Let's take a look at the gold market right now. You can see, guys, that our analysis that we have prepared in the weekend has happened really fast, because in our weekly research we said that any action above the 1315 area approximately, by the information from the physical traders, physical commodities traders, any action was not supported by the real purchases from the investors on the spot market. And the same information has come from the CFTC report that we also have discussed. And guys, actually the CFTC gives us really significant information for the second time. Recall that a couple of weeks ago we also said that since market hasn't supported by real purchases, this has led to this retracement down. This calling market for the second time wasn't able to pass through this resistance. Recall what has happened a couple of weeks ago. Here is again, but here is the situation is really more significant, because under recent information, investors fixing profits and closing the position at the eve of the FOMC meeting. Also, guys, today I find the article on the Bloomberg in the thread, the news markets, commodities markets. You can find it by yourself, that Goldman Sachs still supports their bearish view on the gold market till the end of the year. I have no time to read it yet, but I probably will do this today, and if you are interested with it, you could also read it. So not all investors think that gold market will continue to move high even at the eve of the bullish seasonal trend that will start at the end of the August. That's also in the short-term perspective, guys. We also think that market really could continue to move lower as we will turn and come closer to the Fed meeting. The market really could continue to move to the downside. Well, but this real first fast plunge has happened yesterday. From the technical point of view, that was the stop grabber. Here was the stop grabber as well. So market has plunged down. That's the first initial move to the downside. Our target that we have specified stands in an area between 1290, 13 area, 13 even area, because that's the monthly pivot point. It hasn't been tested yet. That's really interesting. That will be the daily oversold, and that, guys, the former confluence resistance the market has passed with this candle as it now exists. The market could show some emotional action, but if it hasn't been supported by the real purchases on the spot market, real investors, sooner or later this action will end and market will return right back down, because it has no solid foundation. It is not backed by real money, real inflows. That is what we will see right now. Right now market stands in the support, as you will see on the forward time frame chart, and we could probably be ready for a possible bounce up, but still this momentum is really significant, and we probably could use any retracement for taking short position with the hope that market will finally reach this area, because it hasn't quite reached the significant targets yet, and by this momentum, by the gravitation of these targets, market probably will show another leg down. Besides, guys, this action is the reversal swing, the first swing up of the long-term downward action. Here we see downward action, it's the first swing up, because this top is greater than this one, and usually after the reversal swings market shows deep retracements, and I can't exclude even that market will show some sort of the ABCD downward action. And in general, the gold market is really interesting from the analysis point of view, because here, guys, in this bottom, market has reached the minor target of the ABCD pattern on the weekly chart, as we have discussed. And from that standpoint, it's very interesting. What is that? Maybe this is the continuation. Maybe this is the start move to the next target to the downside, to the ABCD. Since this is the 618 extension, maybe market by this action has started move to the 100% extension. Who knows? In the medium-term perspective, the gold market is really interesting. Well, but in the short-term perspective, we suspect that, as I said, as closer we will come to the FOMC meeting, the more pressure will be on the gold market, because, as I said in today's Forex research, investors could start to slightly accumulate the US dollars in the hope and expectation that the Fed finally gives some hints on the possible changing in the rate policy. And that could lead to some gradual and smooth pressure on the gold market, and that probably could tell us that the nearest future this downward action could continue. I'm not sure that it will be really the same pace as here, so hardly we will see the same candle to the downside. But still gradual action is possible after some retracement. So on the 4-hour time frame chart, we see that market stands right now at the support 1305, the first free major support here. And how market will continue to move lower, mostly it will depend what pattern will be formed. Initially, guys, we thought that this could be the head and shoulders. So left shoulder head probably could be the right shoulder. I'm not sure. I do not know. Maybe this will happen. Currently, it's very difficult to say how extended retracement to the upside will be. Taking into consideration that this action was really fast and not very small, maybe market will form something. Maybe it will show the deep retracement. In general, the habits of the gold market is to show deep retracements. We will see. But what I could say that any retracement that will happen probably here, we could use for taking the short position with the hope that market will form something at least ABCD down to the 1290 area. That will be our minor target, just the target that market should at least reach in this area. On the hourly chart, guys, do not be deceived by this action. That's not the double repo pattern, although it looks really nice. But you can see it for us excellent. We can't argue about this. But guys, that is not quite a double repo, because this is the first bottom of double repo. By the letter, that was really close above, 3 by 3 close below and close above again. But that is not the bottom of the double repo. When you get the double repo, you need to see that on the second bottom, the bears have capitulated in the short-term perspective. So they have tried to push market lower but failed, and that leads to first opposite action. But here is not the capitulation, that's just the consolidation. Maybe due to the hitting of the support, that's just a pause in the downward action. That's not the double repo. That's why here market probably will form some other pattern if it really will show some extended retracement to the upside, maybe to the 13.1560 confluence resistance, maybe even to the 13.25 area. That's also possible. If this will happen, in this case we probably get the 4-hour head and shoulders pattern. But probably here market will form something different. Maybe this will be head and shoulders, maybe butterfly or something of that sort. But that guy is not the double repo. Be careful with that. So our trading plan currently is relatively simple. Just wait for the bounce up. First, get the pattern to estimate how deep the retracement could be. And when this retracement will happen, we can try to take the short position with the hope to get some greater ABCD pattern.